My name's Todd Kennedy and I'm the Head of Distribution at TPT Wealth, and I'd like to take the opportunity to welcome you here to our online session in relation to the changes that we're proposing for the TPT Wealth Select Mortgage Fund. Today's presentation will run for approximately 15 minutes, and before I start, I wanted to cover off some important information before we get into today's session. Today's presentation is of general nature. It doesn't take into consideration your personal situation or financial objectives. The information is of general nature, and for many of you who are existing investors with TPT Wealth, you'll be familiar with the fact that our investment funds are managed investment schemes, and they're completely separate to any investments held on the banking side of the business. As such, they don't carry with them a government guarantee. So for today's session, we're going to cover off obviously the important changes that we're proposing for the Select Mortgage Fund. I'll talk about what those changes are, the advantages and disadvantages, but importantly, what's the motivation behind us as a business putting forward these changes to you as an investor. I'll also talk about the timing from this point forward. There's some information that has been sent to you as an investor, and it centres around a proposed meeting in September. So I'm going to talk about the process from here. How do you vote? What do you do if you would like to attend the meeting in person? And also, following that meeting, what can you expect to receive by way of communication and update? I'll finish as well by sharing some of the questions that we've been asked along the way from investors, which may be of benefit to everyone. Now, before I get into today's presentation, I just wanted to provide a little bit of background as to how we got to this point today. So probably 6 or 12 months ago, we had 3 income funds that were virtually the same. You could almost throw a blanket over them. Their features, their terms, the returns they offered, the underlying investments, the underlying low risk profile, everything was very similar for these funds. And in particular, the notice period was 7 days notice for all of the income funds. What that has meant is that over time, we carry a very large amount at call in these funds, and it's around 30%. And we have that there as a provision in the event that a lot of people wanted to do some redemptions in a short period of time. Now, I'm sure you'd appreciate in this low interest rate environment, having such a large amount at call means that it's very difficult to get a decent return for you as investors on this amount of money. So we've been looking at ways that we can actually improve the return to our investors. We know that that's very important given the current environment, given where interest rates are at, but also given that low interest rates are expected to be here for some time. So we know that investors are looking for an improved return. Equally though, we want to make sure that we continue to manage the funds in a prudent manner that our investors have been comfortable with over the years since we first started investing since 1977. So let's take a look at the first change. So you'd be aware that the Select Mortgage Fund used to have an initial term of 12 months. Once you serve that term, any redemptions could be made at 7 days notice. We're actually changing that and proposing to our investors that this fund becomes a rolling 12-month fund. So you'll have an anniversary date for your investment. And if you would like to access any of your money or all of your money, you need to let us know before that anniversary period. And if we don't hear from you, it'll automatically roll over for another 12 months. So the example that we have here is that an investor opened up a fund with us on the 31st of January, 2022, $50,000. So the period that would roll over would be the 31st of January 2023. That is, if we didn't hear from the investor regarding any redemptions. The second change is around the notice period. So we're moving from a 7-day notice period to a rolling 12-month term whereby if you would like to access some of your money or all of your money, you can let us know at any point in time during the 12 months, so long as you let us know before 30 days, no later than 30 days before that anniversary date. 30 days before the anniversary date is locked as far as requests, so you need to let us know before that period of time. What will happen then is if you've put forward a redemption request, we will process that in 3 to 5 business days following the anniversary date. So the example that we have here for an investor with their 50,000 on the 31st of January 2022, they need to let us know no later than the 1st of January 2023 if you'd like to make a redemption of any kind. If you do put forward a request, once the 31st of January rolls around, we'll make that payment to you to your nominated account within 3 to 5 days. What about additional investments? So you're probably aware that at the moment, you can make an additional investment to your Select Mortgage Fund at any point in time. With this becoming a rolling 12-month term, there'll be some changes to this. So you'll still have the ability to top up your investment. You need to do that in the 30 days leading up to your anniversary. So again, for the example we've provided for the investor who opened up their fund on the 31st of January 2022, if they would like to top up that investment, they'd need to do that in the 30 days prior to that anniversary date. Now, if you wanted to make an investment during the year, like in this example on the 12th of July, that money would not go to your existing parcel of 12 months. It would actually be set up as a separate investment. It would still be under your name. It would just appear as a separate parcel with a different anniversary date. We're also taking the opportunity to align our Select Mortgage Fund with our other 2 funds to make sure that the constitutions are consistent. Our other 2 funds at the moment have a maximum period of time for redemptions, if required, set at 180 days. The Select Mortgage Fund, however, has 60 days, so we'd like to take the opportunity to make that consistent across all 3 funds. Now, this actual part of our constitution is there as a safeguard to protect our investors in the event that we needed to delay the processing of redemptions. I will say, though, that since we first started investing our money since 1977, we've never actually had to use this clause, and we've always paid our redemptions on time. And if I think back the various cycles we've managed money through, it's the global financial crisis and most recently COVID. So we're very proud of our track record. We recently had our fixed-term fund independently rated, which came back as superior and high investment grade. And one of the things they pointed to was the fact that we have these provisions within our funds that we can fall back on in the event that we need to protect our investors. Our next change around the minimum investment balance is not something that needs to be voted on and may not affect a lot of investors. However, again, we're taking the opportunity to make our 3 funds consistent in relation to the minimum investment amount. Our other 2 funds, that's $5,000. It has been higher for the Select Mortgage Fund at $25,000. So we're looking to take the opportunity to align that and make that minimum $5,000 across all 3 funds that we have. So just a bit of an overview. I guess the disadvantage of the change that we're making is that there's no longer the flexibility to make a redemption at any particular time during the year at 7 days notice. However, in return for making this change, what it's actually doing is providing our investment manager more notice and a bit more certainty around what are the likely forward-looking redemptions that are going to happen in the months ahead. And what that means is it'll enable us to manage the investment differently in a sense that we won't have to have as high amounts sitting at call that I mentioned at the start of the presentation. And at the moment, we currently hold around 30% at call. Making these sort of changes will enable us to reduce the amount that we have at call, invest that portion of money for longer term, and this in turn will drive up the performance of this fund. Now, making that change alone won't be the only factor that needs to change as far as improving returns. A big part of what we've been looking at from a business in the last sort of 6 to 12 months has been around investing in our commercial lending part of our business, the business banking side of TPT Wealth. At the moment, we currently have around 30% in commercial mortgages in this fund and our other two funds. And traditionally, we've held a lot higher amount. So we've invested heavily in our systems and our people to really make sure that we start to grow this part of the business. As those loans come through to our portfolios, in conjunction with the changes that we're making around the notice periods, which will enable us to have less in cash, this will ultimately, in turn, drive up the performance for you as an investor. And that is the main motivation for us in putting forward these changes. So what is the process from here? So nothing actually changes at the moment. Because this is a change in our constitution, we're required to actually go to a member vote. And I'll talk about that meeting shortly. You would have received some paperwork from us recently relating to this change. And importantly, you don't need to do anything now because the changes, if they're approved, won't actually come into force until the 1st of January 2022. We recently made changes to our fixed term fund where we pushed out the notice period from 7 days to 90 days. And when we made that change, we gave our existing investors 3 months where they could make any changes they needed to for their existing arrangements. So following the meeting and the outcome, we will write to everyone, letting them know if the proposal has been approved. And then everyone has a period of time between then and the 1st of January if you'd like to make any changes. So for many investors, they will just keep their investments as there is, and there's no change required from you. If, however, the notice period and the change to that doesn't suit your situation, or you'd feel more comfortable having a proportion of your money or all of your money at a shorter notice period, then on this slide, you'll see that we do have 2 alternative funds for you. And it's the main thing that we wanted to convey again today, alongside of the motivation for us making this change. Throughout the process, when we were considering how we could improve performance for investors, we wanted to make sure that we retained all of the characteristics that we know you as an investor value up until this period of time. And we know from experience that emergencies come up from time to time, and people, it's very important, and they feel comfortable knowing that they have a portion of their money that they can access at a shorter notice period. There's 2 alternatives for our investors here. The long-term fund, which has 7 days notice, and that won't be changing. So if you're someone who values having a shorter notice period, you have an option here in relation to our long-term fund. We also have our fixed-term fund, which has 90 days notice. And since making that change to the fixed-term fund, it means that we can carry less money at call, and the performance of the fixed-term fund has already started to improve. And at this point in time, it's actually our highest returning fund as I speak to you today. For all of our existing investors, from the period of time that the meeting occurs, if the vote is approved, then we're providing you with an opportunity to make any necessary changes that you need to make to your funds from that point to the 1st of January, and we're waiving the initial terms that you would ordinarily need to serve. So you'll see for the long-term fund and the fixed-term fund, they have a 9-month and a 6-month initial term in normal situations. If you actually need to make a change and you do so before the 1st of January, we're waiving that initial period of time to make it easier for investors. And what we did see when we made changes to the fixed term fund is that some investors took the opportunity to move a proportion of their money at a shorter notice period, like 7 days, just for that peace of mind knowing that in the event of emergency, they had access to money and they didn't have to wait for an extended period of time. So what do you need to do? What's really important and what we're really encouraging all of our investors to do is to vote and have your say. And you would have received paperwork from us recently in relation to an upcoming meeting. That meeting is going to be held on the 22nd of September. I'll talk about that shortly. But in the information that you received, it outlined the ability for you to vote prior a proxy form before that meeting. When you received your paperwork, the proxy form was a generic proxy form. So it's really important that when you lodge your form, you used the second proxy form that we sent to you, which is personalised to you individually. Now, a lot of people and investors are taking the opportunity already to complete their proxy forms and send them in. Our board and management supports this change, and we're encouraging all of our investors to vote yes. So you can actually do that now by lodging your proxy form and sending that in. Those forms need to be received no later than 2 days before the meeting. The meeting itself, as you'll see in this slide, is going to be held a physical meeting in Hobart. We do have provisions for people to actually attend the meeting online as well. And in the unforeseen event of COVID preventing us having a physical meeting, we do have provisions to continue on in an online capacity. So the meeting itself, if you are intending to attend in person, there are some requirements that you need to take, and they're outlined on this page here. If you're intending to attend and you're unsure about what is required, then have a look at the information here on this slide, or if it's still unclear to you, you can give us a call in our client services team. There's a couple of things that we need to make sure that we achieve in order for the meeting to go ahead, and the first thing is to have a quorum. So we need to have at least 10% of the fund attend either in person or via proxy. And the second thing is for the proposal to be approved, of all of those investors that vote, either in person or via proxy, 75% yes is required for the changes to go ahead. And as I said before, once the meeting's held, we will be writing to all of our investors, letting them know the outcome of that meeting. So in summary, and before I get onto some questions, I just wanted to recap some important information. So what's changing? Well, we're moving from the current situation where you have an initial term to serve. We're moving to a rolling 12-month investment, whereby your investment will continue to be invested for another 12 months if we don't hear from you in relation to making any redemptions. The redemption notice period will be changing in that you need to let us know for any withdrawals or redemptions that you require, be it partial or full, no later than 30 days prior to that anniversary date. If you'd like to make additional investments, you can top up your existing investment by adding money in the 30 days prior to your anniversary. Outside of that period, during the year, if you'd like to make an investment, you would need to do one of two things. Either set up an investment in a Select Mortgage Fund, which would be separate investment, separate parcel under your name with a new anniversary date. Alternatively, though, you can invest in our long-term fund or fixed-term fund, and you can actually add money to those funds at any particular time during the year. One thing I wanted to point out is that we have always had a facility in our funds for people to do an early redemption before they've served their term. You can apply to the investment manager to access your money in the event of unforeseen circumstances. And there is a penalty that applies to doing that. So I'd really encourage people not to actually rely on this as a safeguard, but plan ahead and work out how much money would I be comfortable with at a shorter notice period, and look at perhaps the long-term fund with 7 days notice, or the fixed-term fund at 90 days notice to see if that's more appropriate for you. And the money that you leave in the Select Mortgage Fund is money that you're comfortable that stays in there for a rolling 12-month period. That said, we will always maintain, and we're continuing to maintain, the early redemption facility. The maximum time to pay redemption is something that we're looking to make consistent across all three funds. So that'll be changing, if approved, from 60 days to 180 days. And that'll be the same for all of our funds. And lastly, the minimum investment amount, which doesn't require a vote, will be reduced from 25,000 as it currently is to 5,000. You'll also see on the screen confirming the key date of the 22nd of September if you would like to attend the meeting in person or online. And importantly, your proxy needs to be lodged before 10 a.m. on the 20th of September. So that concludes the formal part of today's presentation. What I will do now is just sort of share some of the common questions that we've had from our investors to date. And the first one relates to the early redemption facility. And if somebody did need to apply for that and it was approved, what would be the cost to do that redemption? In our product disclosure statement, it outlines an example of what that cost is. It's based on the amount that you have invested times a percentage, and it depends then on how much time you've got left to serve, be it 3 months or 6 months, which is the example we've provided in our product disclosure statement. It shows that if an investor had $10,000 and they needed to break their investment and there were 3 months remaining on their term, the penalty would be $30. If there were 6 months on a $10,000 investment, the penalty would be $60. Now that doesn't seem like a lot, but if you times that by 10 for a $100,000 investment, or another 10 for $1 million investment, that penalty and break cost can actually be quite substantial. And that's why I was saying before, it's really important not to rely on that as your safeguard, but actually to make sure you've got enough money in access for a shorter period of time. And again, we have a couple of options for you: the long-term fund, which is 7 days notice, and the fixed-term fund, which is 90 days notice. The other question that we've been getting is, how do I know what my anniversary date is? So your anniversary date will be the date that you initially opened your investment fund. Now, we appreciate that many of our investors have been with us for a number of years, and we don't expect you to actually know what that is. So post the meeting held in September, and if the vote is successful, we'll be writing to every investor, letting them know what their anniversary period is. The other question that we've had was around, so we're making some changes to the funds, and we're talking about changing the notice period, talking about our ambition to get more loans into these funds. What are the potential returns that we're aiming for? And whilst there's no guarantees on performance, as everyone will be aware, ideally we would like to make the Select Mortgage Fund our flagship fund when it comes to our returns. And we're aiming in this current environment to get a 3% return for our investors net of fees. So if I could just summarise, with this change, if it's approved, we'd end up with 3 funds. Our long-term fund would have a 7-day notice period. Our fixed-term fund would have a 90-day notice period. And the Select Mortgage Fund would have a rolling 12-month term. The Select Mortgage Fund would have the highest rate of return. The middle rate of return would be the fixed-term fund. And the lowest rate of return, because it has the most immediate access, would be the long-term fund. So ultimately, we'll end up with 3 funds that have clear differentiation, so it's easier for investors to pick which one's appropriate, and we'll actually be improving the performance, which will relate to that notice period. And we anticipate that a number of our investors will probably have holdings in more than one fund to accommodate their short-term cash flow needs, as well as getting the best rate of return they can on their funds. Lastly, the other question we had was just to clarify around making additional investments. So if, for example, you would like to add money during the year and you're in the Select Mortgage Fund, you can't add to that parcel during its 12-month term. You'd have to do so in the 30 days prior to the anniversary. Remember though, our other funds, be it the fixed term fund and long-term fund, have the ability for you to add to those investments at any particular point in time. If you wanted to invest in a Select Mortgage Fund because you like the rate, you could actually still do that. It would just be a separate investment established under your name with a new anniversary date. So that concludes our presentation for today. Thank you for tuning in. Hopefully it's been a benefit to understand the changes that we're putting forward. And I'd just like to say that if you do have any further information, please contact one of our team at TPT Wealth on our client services number, or you can go to our website as well for further information. Thank you.